Guys, I was talking to a local attorney today who has been practicing in our market for over 25 years. Now, he is looking to retire most likely in the next 5 to 10 years. Let's just say 6 to 8 years. So he wants to, I called him about his building, wanted to find out if he'd be interested in selling it. I have another client interested in purchasing his office. So I call him, we get to talking, and sure enough, he lets me know, well, I'm at least 5 years out. I probably got another good 5 years to run hard at this. Then I just want to sit back and, do a handful of cases every year, but I really don't want to get out of the game. Ultimately, he wants to keep the routine and he wants to have some sort of space to be able to keep practicing, but he wants to also be able to sell his business just 5 years from now. And that's where the hidden insight is. That's where a lot of professionals and small business owners go wrong. You'd like to invest in commercial real estate. I'd like to show you how these properties make profit and break down all their expenses so you understand how they operate, how they appreciate over time, and how this will impact your taxes. I'd also like to let you know the property's cap rate and how it compares with similar properties in the market, how the location best services its users, and the potential for future growth. I'd like to fill you in on the historical and future occupancy trends, as well as potential management structures affecting the investment. And we won't miss the investment's risk profile nor the best exit strategies. Yes, we'll cover the condition of the property, any value add potential, and repositioning, but we'll also dive into special topics like customer base, market positioning, and marketing and booking strategies when it applies. And if you stay tuned until the end, I'll show you my top picks for the best commercial real estate deals that have generated the most annual profits, have the highest appreciation, and the best tax implications. So no matter if you're a first-time investor or a seasoned professional transitioning into the real estate game, or perhaps simply a casual investor looking to relocate to the beach to live, play, and invest so that the passive income can support you in your retirement years, whether you have 20% to pay down because you're financing or you're a cash buyer, if it's a commercial real estate investment that you're after, you'll be better because I'm aiming to give you a 10 times return on your time for watching my videos until the end. Now, here's the deal. The whole point is leverage. Leverage is what wins in a deal. If you don't have leverage, you don't win generally. Think this through. If right now, 5 years out, he exercises one of two options. One, he can sell the business and lease the building to a potential client. That's one option. Now he's got the building, he's got the rental income of the building. He can put a contingency in place that basically says, all right, I'll sell you this business, I'll lease you this building, and you've got to let me have one office for the next 10 years, whatever, blah, 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 blah. So he still basically has the power. He's got the leverage in the deal. And in commercial deals, this is especially important. So that's option one. Option two is he can sell the building to a potential investor who would find it attractive to know that he's been there for 25 years and will agree to sign a lease for the next 5 or 10 years on that property. Now, if you think through it, if he plans on retiring and he waits until a year out to put that building on the market, what's going to happen? He doesn't have the leverage of, I'm going to rent that building from you for the next 5 years, Mr. Investor, and I've got a 25-year track record, so I'm a sure return on investment. Basically, he loses that leverage, and now the building is not attractive or not nearly as attractive as it could have been. Plus, he gives up the potential to make the highest amount on the sale of the property and or the business while things are healthy, and he's got leverage working in his favor on his behalf. So what many professionals do, doctors, dentists, plastic surgeons, attorneys, what many professionals do is they don't think these things through. They don't think about leverage, and they wait till they go to retire, and what they get for the building is what they get for the building, what they get for the business is what they get for the business, and they lose the component, they lose the power of all the compounded work that they put into building that business, making that location of that office great. They lose the leverage in the circumstance because they don't sell the building or the business early enough and keep the control. What they ultimately really want is they want control, they want flexibility, and they want to stay in the game. They want the routine. They want to, basically be able to practice as they want to practice, but also have some extra money in their pocket to travel and live their life and have that flexibility in their retirement years. Okay, great. Just don't give up the leverage, because the leverage is where you make the money. And if you make a bunch of money, you can go travel the world, you can go invest in a new business, you can go take up a new hobby. It's what you've been working for so hard all those years. So to simply have a little bit of prudence and forethought will take you a long, long way. That's the mistake I see professionals making in the commercial space. They don't think it through. They don't sell the building fast enough. They don't sell it while it's hot. They don't sell it while they have leverage in the game. Because they don't do that, they miss out on the returns that they could have made, essentially squandering a lot of hard work. And I hate that for attorneys, doctors, dentists, plastic surgeons, professionals, small business owners, you guys that own shops and businesses that you've built up for 20 and 25 years. You've got to sell the business before you lose the leverage. That's the big problem. Now, second problem I see, I believe that you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties, because of the strong rental demand from a growing population. The city's population grew by over 20% just in the last decade, with a significant portion of new residents moving here due to the low cost of living, warm climate, and access to beach amenities. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties, because of the tourism-driven economy. Tourism accounts for over 25% of the region's economy. The demand from tourism-related workers ensures a steady flow of renters in multifamily units year-round. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties, because of the affordable property prices and high cap rates. With an average cap rate for multifamily properties being typically around 7 to 8%, our market is higher than national averages for coastal areas, offering strong rental yield potential. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially in multifamily properties, because of the potential for value-add investments. Many properties near the coast have strong locations, but may be underperforming due to outdated facilities or lack of amenities. Renovating these properties can create significant upside for potential investors. Now, I get calls, emails, and texts all the time from investors just like you looking to make an investment in Myrtle Beach Oceanfront condos or commercial properties in our market. If that's you and you need a savvy investor to run financial analysis, to generate profit and loss statements, that has the research and has hard factual data that backs up how these condos have rented. If you need proof, I can get it for you. No matter where you are in the journey though, don't be a stranger. We've got lots of stories. Lots of investors call off of YouTube, email, text me. I work with all kinds of people from all over the world, guys. I want their story to be your story. So pick up the phone, give me a call. Get over your fear. Stop being afraid. The season's almost over. You can't waste any more time. Stop watching videos and pick up the phone and take action, because it can be a life-changing decision to make contact with me and open a new chapter of your life. 843-360-1737. Now, second problem I see is people that own commercial properties generally lease the building to themselves at too low of a rate. Or, let me kind of backtrack. Let's say, for example, that I'm getting ready to sell a property and I've got a lease on it to myself. Let's just say for $5,000 per month. But the market, lease is $10,000 a month in that area. Now, I'm leasing it to myself because I own the building and my business is renting the building from me because I'm the landlord, and I'm charging myself only $5,000 a month when market rents in the area are $10,000 a month. Well, because I'm charging such a low rate, guess what? When the appraiser comes out to appraise that building, they are going to appraise that building using two different approaches: the market comparables, and the income approach. Now, because I've leased that building to myself so cheap so that I could save on my operating expenses throughout the year, guess what's going to happen? My appraisal is going to come back low, and I'm not going to get as much money as I could have gotten for that building. What do I need to do? A year out from selling the building, I need to raise the rents to what the market rate rent is on the building so that I can sell it and get a premium for the sale of that commercial space. Those are the two biggest problems that I see when it comes to commercial spaces: professionals not selling when they have leverage, and professionals charging themselves too low of rent just before they go to sell the property. You can lease it to yourself for 25 years at $5,000 a month, but in year 26 that you're going to sell that property, that lease needs to be the market rate lease so that you get the premium for selling that property instead of having to sell it under market value, which is exactly what's going to happen. Guys, I work with professionals and commercial sales all the time. Pick up the phone, give me a call. It's 843-360-1737. I don't care if you're an attorney, an investor, a small business owner, whatever you're looking for in the commercial space, I can help you make a savvy investment decision, protecting your hard-earned money. You know what it's like to get up and go to work every day. I'm a small business owner myself. Please pick up the phone and give me a call. I just helped another local professional land a beautiful office building in a great space, exactly what they were looking for. I'd like to help you do that same exact thing. You need a savvy broker that can help you do that. Again, it's 843-360-1737. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, because our market has been the fastest growing market out of the 150 most populated markets for the past 3 years. Over 90,600 people relocated to Myrtle Beach, South Carolina in 2023 alone. This means increased demand for commercial space like retail, multifamily, office, and industrial, and ultimately excellent annual profits and appreciation. Now, for retail, more residents equal more consumers equal higher rental sales potential. This drives up rents and occupancy in retail centers. For multifamily, higher population boosts demand for rental housing, pushing rents up and lowering vacancy. Now, for office, job growth typically follows population growth, increasing demand for office space. For industrial, more people means more consumption and e-commerce activity, increasing warehouse and last-mile logistics demand. Ultimately, the return on investment impact is higher rents, lower vacancy, and rising property values that drive higher net operating income and appreciation. I believe you should invest in commercial real estate in Myrtle Beach, South Carolina, especially oceanfront hotels in the hospitality industry, because of the 20 to 22 million tourists that visit our market each year. which is the #2 vacation destination on the East Coast. High tourism equals steady demand, making it one of the most visited beach destinations in the United States. Our oceanfront hotels benefit from consistent seasonal occupancy, premium nightly rates compared to inland properties, and repeat visitors including families, snowbirds, and golfers. I get calls and emails every day from investors just like you looking to make their move into the Myrtle Beach market. They want to invest in short-term vacation rental properties. They want to invest in oceanfront condos. They want to know where the best deals are in our market. Well, guys, you're talking to the right person. 843-360-1737. I'm going to help you put your hands on the best deals in our market. If you're a first-time investor or a seasoned investor, if you're 1 year, 6 months, 3 years out, I don't care where you are in the investing process, pick up the phone, give me a call, send me an email, shoot me a text message, and let one of the many stories on our channel be one of your stories.